Welcome to the 2025 Economic Depression and Preparation channel. Thank you for joining me. Happy belated New Year to all my new subscribers, cohorts, chums. Appreciate each and every one of you. Our thoughts and prayers go out to the people in California, Southern California, the communities affected by the wildfires, and also our thoughts and prayers with the late former President Jimmy Carter and his family of Georgia as they laid a rate and as we laid the markets from the rest and everything today as he's in Iron State and is going to his final home in Plains, Georgia. So we are grateful. We're thankful to be into 2025. And I just briefly want to come on and give a few updates here as we see fit from the latest news. FoxBusiness.com was reporting that the Fed minutes, the policy minutes, as you know, they cut rates again by 25 basis points to end 2024. They show that policymakers see immigration tariff shifts creating inflation uncertainty. So how much inflation will make a comeback, not just in goods and services. The good news is that the dock worker strike that they said the second part, that has been averted, as you know. So the ports all the way from Savannah, Georgia, all the way up through Baltimore, Maryland, and Boston are open for business. And so that is great news as President-elect Trump begins to take office on January the 20th. So that has been averted. And also, the good news is that we're still adding jobs in this economy. So that's the good news. Now, there's still some uncertainty about how high inflation will go this year in 2025, and also how many times the Federal Reserve is going to have to cut rates. I believe that the quantitative tightening, the raising rates is over. I believe they're going to be cutting rates from here on out in the next 2 years. It's just my opinion, but this is what I'm saying that they're going to be doing in the next 2 years, according to these minutes that have been saying. Because uncertainty, because the inflation continues to be getting closer to a stagflation, and also the job market. That's the two key things. The job market is not as hot as it once was before 2024. And so this is causing big problems for a lot of people. But workers in these states just got a pay raise, according to CNNBusiness.com. They've been raising the federal minimum wages. Hourly minimum wages increased in 21 states in 2025, mostly due to ongoing efforts to have pay keep up with the cost of living. Well, regardless if you live in these 21 states or not, ladies and gentlemen, we know that none of our pay actually keeps up with the actual cost of living. And so many of us have been living below our means and trying to, consolidate and downsize and do things to help to buffer our chances in this new economy, this new technocratic, autocratic economy that we've experienced. But anyway, right now you can see the increases here. Into Virginia, Delaware had the biggest increase. Actually one of the small increases. It went from $15. Now it's gonna be $15 an hour. It was $13.25 in 2024. Some other states like Missouri, minimum wage was $13.75 this year. In 2025, it was $12.30 last year. Ohio, it was only getting a 30 cents increase. It was $10.70 now this year. Last year it was $10.45 an hour. Nebraska sees some decent change. It's $13.50 an hour. It was $12 an hour. California is going to be $16.50 an hour. It was $16.24. So these have all been inflation adjusted here. You can see it on CNNBusiness.com according to the Department of Labor. And so that's some good news for those of us on minimum wages or who have working two part-time jobs, one full-time, one part-time, that the minimum wage has been rising along with everything else. Unfortunately, as you know, the cost and the property taxes, the sales taxes, everything else is raising too, along with that. But minimum wage has been long overdue for the raise. So let me know what you think about that during this time here. But the 30-year fixed mortgage rate hovers just above 7%. It continues to rise. And ladies and gentlemen, we've all been waiting for this housing cool down. They've been saying that the prices are going to have to come down 40 to 50%, like a market correction. That hasn't happened in the last 3 or 4 years. In fact, some places the prices continue to go up, even though you're getting less space for your money, less square footage for your money. And then, so now with the mortgage rates going just under 7%, it's going to eclipse 7% probably by the end of this month. And so this is going to put a strain on people who are trying to be first-time home buyers and things of that nature. We have to continue to watch that in areas that are not so hot. People away from California, Florida, Texas, states, Arizona, Idaho, states like that have been growing, Colorado, states like that have been growing. We're going to have to go into the Midwest, more of the states that are not growing, to see the trend, to see if the prices are actually falling down at this time. So the BOJ sees widening wage hike signals chance of near-term rate hike. So this is the opposite. Investing.com was reporting that they believe that by the summertime, around late fall, the Federal Reserve Bank can actually start hiking rates if they see inflation goes higher and they see that the price pressures and the labor pressures goes higher. So they're forecasting a rate hike by the middle of this year, and that's uncertainty for the incoming administration that they're going to have to make policy decisions that are going to cause a lot of belt tightening in America. We'll have to wait and see if that proves to be true. I don't know either one way or the other. But what I do know is that the debt level is growing above $34.5 trillion every day. And that means that the money that we do have, the US dollar, even though it's the world reserve's currency, is still becoming further and further debased from its original value. And so as it takes more and more dollars to get fewer and fewer goods, that creates a widening gap between the rich and poor. And you know how that goes. It creates maybe not a Great Depression, but it does create a slowdown, a severe recession for the majority of Americans on Main Street. Now, whether that takes 5 or 10 years or 15 years to happen, it slowly happens over time. And that's what we're seeing now. It's not just one big collapse. It's things are slowly being eroded away, slowly, one domino at a time. So as we say, continue to prepare. Thank you for listening in this new year. God bless you. Please be safe in this new year as you continue to work diligently, as we all continue to work diligently with our family, friends, and cohorts. And I'll see you in the next episode. Thank you for listening. Be sure to subscribe, share this video. If you haven't hit that like button, if you're not getting any notifications of the latest video, I appreciate it. Talk to you soon.